Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. Chinese GDP came in at 7.4%. Europe is trading mixed. U.S. has been up really nice Monday, Tuesday, Wednesday. We're a little bit flat with the futures today. We have a lot on tap with jobless claims, natty gas numbers, and a slew of earnings.
So there is movement.
There's a lot going on.
And I think today traders would like a lack of movement, considering we just had a big 3-day bounce. We just had a really successful test of the 50-day moving average last Friday. And at this particular point, I think a rest is due. Obviously, you're going to get individual stock movement based on earnings because there's a lot of them coming out. You know, we saw IBM yesterday. I thought that was pretty impressive. IBM down $10, and the market's just yawned. I think Intel was even down 0.5%, and the market yawned. So the money is rotating. There is action, and there's a lot to go after. But you have to know where it's coming from and what's reporting, and there's a lot more coming out today.
Right, and so there's some really key levels that we have to take a look at going into trade and following the open. So what are we going to be looking at?
So if you go to the chart of the S&P, you'll see right here that there you go. You know, this was the last pattern that we've had in place. I'm not going to go back a year. I'm just going back, you know, this quarter or so. This is that cup and handle pattern. And if you look, you know, it looks pretty methodical considering that all we did while everyone was ranting and raving about this corrective activity to the downside is come and retest the basic pivot point, or what we call the handle. Okay, here's your handle of this cup and handle pattern. It also, you know, goes within, you know, the prior breakout here. So we came in, tested the 50-day, tested the handle, and then bounced, you know, very sharply. So at this particular point, I would say I would love to see a little rest in front of this downtrend. You know, maybe even pull in a little bit, hold the top third. So if we could pull into just a 1448, which I think I'm wishing for, I'd love to be a buyer of the SPX for then what could be a powerful move to the upside through the September 14th highs, which is around 1474.
Moving along to the sector spotlight, we're going to take a look at cybersecurity. A couple names that we haven't focused on recently. On Monday, October 22nd, TheStreet and Zurich were co-hosting a webinar as it pertains to individuals, enterprise, and the government. It's really key here, especially for you T3 traders, a lot of sole prop guys, the LLC guys. The biggest concern in cybersecurity right now is the smaller guy not really being up to date on what they need to know to protect their business. So we're going to have some really great information in here for you. Let's take a look at some of the names. Intel, they bought McAfee, so they have that big cybersecurity division.
Well, I think more people should probably focus on that versus their PC sector of the group, because the PC sector has been horrendous.
Well, that's where the growth is going to come from.
Well, that'd be good because they're looking for growth. Because right now they have a lot of cash, the PE is low, but you know it's just been the perception around Intel for the last 6 months has just been very negative and weak. And yesterday, you know, after the earnings, it gapped down, but it acted a little bit better. It didn't close in the lows, and it didn't just, you know, couldn't find the friend. So at this point, it might be worth a look. So if you look here at Intel, you see the chart. You know, this stock, you know, if you remember, you know, in August, okay, right here is when the market actually started to rally, okay, to make a nice move to the highs. Well, what did Intel do? You know, it went down to the lows. So it's been showing a lot of relative weakness. You know, but yesterday it opened lower and closed near the highs. So if you wanted to try, and who knows, maybe the security side of Intel starts getting some airtime or whatnot, I would trade it versus 2127. But if this stock doesn't hold 2127, just get away from it. It's not worth your time. And if it starts to get going and perhaps breaks this small little downtrend, which I do think is a stretch, I don't think it happens, but if it does, you know what, let it go, stay with it above 22.5. Maybe you see a bounce back to the 24 area. So right now, trade it versus this level, and if it doesn't hold there, just get out of the way because there's a lot better things out there.
Moving along to Symantec, which is a leader within this sector. I had the opportunity to interview their chief technology officer, and she said the 3 key things that they're focusing on, and we've all heard Kramer talk about this ad nauseum: mobile, virtualization, and the cloud.
Right, and I remember this one used to be an animal. We used to trade Symantec all the time, and I haven't really heard about it lately, so I'm just putting up the chart now. And when you look at the chart, you know, right now, to me, it looks a little vulnerable, okay? This was your little red dog reversal shooting star top after a really nice move. So this stock had a big move. People were excited about this one in July going all the way into September. And then you had a little bit of a reversal right here, and then you had follow through to that reversal, you know, on this day, which I think was my birthday, September 21st. And now it's been just going sideways. Little negative bar yesterday to take out some of this. So I do think, you know, if you're long it, be a little careful. And I think if guys are looking for a short, they're going to look to be shorting this thing below 1755. Below 1755, it's going to be testing the 200 day. So just watch this area. For it to get out of harm's way, so to speak, it's going to have to get up and out above this 1840. So watch this inside range for direction.
Moving along to FTNT. Wow, this thing has got smacked around if you were long. It's been a pretty crazy couple days for you. Quarter came in okay. Guidance was a little bit low, but they typically guide conservative. But the key here is demand is still strong. I think the reaction to the print was a little bit overdone.
A little overdone?
A little overdone. Your face was ripped off, as we like to say.
You're right. If you went in there thinking it was going to be good, you got your, you know what, handed to you.
Exactly.
But at this point, if you don't take stock into earnings, because one of my key rules as a trader is I do not take stock into earnings. And, you know, and if it's a macro investor, if you held it for years, fine, but you always need to hedge yourself. But as an intermediate trend trader, I trade it after hours. I trade it the next day because there are just way too many blow-ups just like this. So if you have the same kind of rule base that I do and you didn't take it into earnings, then there's an opportunity here. Take a look at the chart. You know, stock was trading as high as 28, came in so the expectations were low, and then pow, got beat up. You know, didn't exactly close on the lows here. So I would say if you want to trade, you know, trade it against the low, okay? Be in it or be in it intraday versus 1950 low. And if it does start to go sideways, okay, and you see some accumulation in here, then I think some guys might trade it for a fill the gap trade, and that's above, you know, 2081. So I think it'll probably take a day or two to go sideways and then watch this gap. And if it doesn't fill a big percentage of this gap, I would say in the next, you know, few weeks to months, you're going to see continuation to the downside. So watch to see if this gap can control the stock or whether it's an opportunity.
Moving along to SourceFire, this one traded down in sympathy with FTNT, but they've already positively pre-announced their earnings, so there might be another opportunity here with that.
Well, if you're not in it,
right.
Yesterday I think guys were like leaning on it because the whole group was short. And to me, this does look more like a pressure zone versus an opportunity zone yet. But I guess the more pressure that comes on, if it's not your problem, then it could become an opportunity. And if you look at the chart here, you will see, you know, even this one, you know, you had a bit of a double top, right, coming in here. And then it's just been slowly coming down. And then yesterday, you know, it broke the 200-day. That's a very negative sign when stocks are breaking out and groups are breaking out, you know, and it pre-announced and it's being for sale. I don't know. That tells me trouble. So if you take a close look here, you will see, you know, it is right now at a prior gap. You see this gap here from February 22nd. So, you know, maybe it tries and holds it. Maybe see some type of reversal pattern. You know, here's your pivot here. That's all you do know. 4064. You know, trade versus 40, actually 68, but if it breaks it, you're going to see some more of this gap get negated, and you know, I still think the pressure's here. It's below all the moving averages. I don't see any reason why to buy it yet. All
right, and at the end of the day, price action is really all that matters when you're taking a look at your P&L. We're going to jump into a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We dive into the trenches and take a look at the discounters. Incredibly active yesterday. A number of the names taking hits. Apparently, there was chatter coming out of a Deutsche Bank field trip that they took investors on, and there was some chatter that DG was taking down some of its holiday numbers. Now, this company's performed really well. Margins look good. They're expanding. Chatter can really knock you down quick. And in the world that we live in with momentum trading,
so you think this was from a field trip chatter?
There was some chatter that was out there that they were going to take down some holiday numbers, and Dollar Tree had also mentioned this last week when they had reported. So I think it's a lot of sympathy in play here. Right. But look, if we continue to get more uncertainty in the economy, these big discounters in your Walmarts and your Targets are going to benefit from that. So short term, there's an opportunity, but long term, I think this might represent a great value as well.
Okay, so you want to look at DG first?
We do.
All right, let's take a look at the chart. You know, yesterday, I guess, you know, people having popcorn on their field trip and started chattering away, and there you go, you know, broke a key support. So at this point, you know, the stock has acted well at some points this year. This is when it was on the upside, when it was following the 8-day. Here's where it broke the 8 and 21 day. Since then, it's been a little bit of a choppy mess. You know, tried again to break back up. Here is a little bit of a flag pattern. You know, couldn't get going, you know, right in front of this old resistance. You know, another flag type pattern broke to the downside, and then it was hovering on major support. And it did come off the low, so maybe it was some sort of chatter that did it. I think they did trigger a lot of stops through the 200-day there. So at least you have another point of reference here. If it was just chatter, it'll reclaim this bar very quickly. If it wasn't, and just say it stays below this what was support, which will be resistance, then I think it's got some more problems ahead.
Right, and I also think the news came out or the chatter at least came out around 1 o'clock yesterday. And if you look at the price action there, I think it dropped almost 8%, and it ended up down about 3% for the day. You could see within the ticks that there's definitely chatter involved versus something that's more of a bigger issue. Let's take a look at its competitor, Dollar Tree, DLTR. Another one last week, guided a bit low for Q3. But again, I think this might represent some value if you're thinking a little bit more long term.
Right, and if you're not in there yet, then there's always value if something's been crushed. And at this particular point, you look at this chart here, look at the technicals. I heard people talking about it the other day because look what it did. It broke major support, and it was a nice short. And then you even got follow through to that, and this is below every moving average out there. So yes, is it oversold? Because it's just as extended from the moving averages to the downside versus if it was to the upside. So at this point, I guess if you wanted to try it versus bottom here, you could do so, and it could bounce back to resistance. But you must love this story. You have to have a long-term time horizon, and unless you see some volume in something different, as a trader, it's been a much better short than long.
Right, well, that's the cool thing. At least we can go long and short all day long.
All day long.
So let's take a look at Walmart. This has been an absolute monster for 2012. The key here is continuing to grow and expanding those margins. But wow, nothing for 10 years in 2012 has just been incredibly explosive.
Yep, that's what happens when you get a decade base. What was it, 1,000 days of pain where everyone was sitting there and institutions were buying it, accumulating it in safe hands, and then the breakout was at 62. And that's really all you needed to know this year, because I'm not a retail specialist, and the reason why this was my retail stock of the year was because of that 10-year base. So if you look real quickly at the chart, just for educational purposes, you go back to that monthly base, or actually you probably even go to the yearly base on it, but I'll show you. All it was, huge move from 96 up until 99. A mega cap needs to digest it. And what did it do? It digested it for a decade. Okay, and it held higher. It's not like it pulled all the way back in and whatnot. It digested the move for a long time, and then finally, I guess with a little luck, I'm like, this year might be the year it breaks out the way the economy is looking for value. The price was 62, the target was 75. We're there now. At this point, it's been pretty choppy. Okay, if you look real closely here, I know I told a lot of my guys that were in it on this day, which I'll say it every different time, that's your time to sell it, okay, because it's a wide range bar, just did a breakout failure, get out of the way, and then, made me look a little silly as it's continuing, but who cares? You've had a nice run, because if you look at something like Costco, the day that it had its earnings and failed, you would have saved yourself a lot of money, right? Broke out, failed, then had follow through to the downside, and you got out of the way in something that's been a very nice trending stock. That's why you take notice with these days. This day to take notice had follow through to the downside. Walmart did not. So, if you're still in it, there's a lot of underlying strength. It's still above all the moving averages. Stay with it until that changes, and and then keep riding it out. But don't chase it up here. I don't think that the risk reward is in your favor.
And let's wrap it up with Target, because speaking of margins, I find it really interesting that they announced they're going to price match with online competitors. I mean, you wonder how much more can you continue to price match and compress those margins. So we'll see. Well, it's going to be really interesting to see how holiday plays out for 2012.
Well, it's starting to get into that whole environment where some stocks in a certain sector are acting better than others. They're not trading like groups anymore. It's very choppy. So
it's great for stock picking.
It's good for stock picking, good for traders. But like this one, like I showed you with Walmart, this one also had a pretty potent down day where I was like, if you want to take some money off the table with Target, you saved yourself some money. That's why if you just continue to do the same thing consistently, you'll be safe. And if you go to the chart of Target, you'll see, look at this day in Target. This was a pretty gross day. Okay, it engulfed a lot of the action, a lot of this churny action for August and September. So if you sold that day, okay, after what's been a really nice run, you see, look at this. It's had a really nice run. Here's your wide range bar. Your day to take notice somewhat. It wasn't a break. It wasn't an outside day, but it was still a pretty ugly candle. So if you got out there, you saved yourself a nice move. And then if you did that, then you actually even had the luxury of buying back on the 50-day for a move back into resistance. So all in all, what has been a very clean move by a lot of these guys. And if you look back here in this descending little channel, I think that was the last time we really talked about buying it. Now it's just become a little bit more of a trade, and I think people are just trying to protect their gains. You know, we are in October.
Right.
A lot of people participated in the rally. A lot of people didn't. So people are trying to figure out, do they have to stay with it? Can they be hedged? Could they sit on the sidelines? Do you have to make money back? So that's when you get a lot of this push-pull.
We also have October 31st too, is when a lot of the mutual funds close out their books. So we're going to see a lot of activity around that. Let's move along to quick hits for some quick cash. We're going to go to Apple, our favorite name to trade, October 23rd. Very key date, guys. We have what's product launch?
iPad, yeah.
iPad Mini. How many do you need?
Right.
Unless you're like us, and we will get we have our iPhone, we have our iPads guaranteed. One of us is going to get the Mini.
Yes. Well, maybe I get it for Chase.
Yes, there you go.
At this point, or either that, I'll pass down my number 3, number 2, number 1. But at this point, you know, Apple is an interesting animal. Everyone gets very sensitive when you talk about Apple, and although investing in it in the past decade has made people much more money than trading it, there are times that guys in my business trade it. And if you remember a few weeks back when it broke to 21-day, said, you know, tread lightly on the Cramer Show. It's a time for 2-way trades. And since then, that's exactly what it's been. Okay, a negative bias to the downside, but you've been able to make money both ways. And right now, it's trying to hold the 100-day moving average. You look at the chart here, you'll see this is when it broke that 683 right there. Boom, that's when the trade changed for me. And then since then, you know, you've had a lot of action. Okay, granted, trending lower, but you could have bought it on the 50-day for a 3-day move. You could have bought it at the 100-day for a 3-day move before failing, and then even more recently on the double bottom. So the question is, you know, can it finally sustain a little bit more momentum? So if you look in here, I did this in the recap yesterday. You know, it feels like every 3-day move gets sold. Here is a 3-day move, sold. Here is a 3-day move, sold. Here's your most, you know, I guess the closest 3-day move we just had, and this one was sold, but it wasn't as fierce. So the question I would think is, if Apple really wants to, you know, stay in the game for what could be a bit more price movement to the upside to the 660, 662, I think it doesn't break below, you know, maybe give it 640. If it breaks below 640, it's game over. It's going to probably just come back down here, and it's still a 2-way trade. If it holds around here, maybe it does a little active trade, a little active red dog reversal, or it trades through 644, comes back above, starts going sideways, builds a flag. You might get one more move heading into that October 23rd event and then earnings. But for right now, you know, the fast money is 2-way action.
Yep.
No opinions, trade the price action, because you've had a lot of activity there.
I think it's great when you talk about trading the price action like we did in the sector segment. Moving along to Google, if you're going to talk about Apple, you have to talk about Google. I was on TV talking about this on Monday night. There's this whole big thing going on. What would you rather earn, Apple versus Google for the longer term fundamental players? This one reports at the closing bell, and we typically don't take trades into the print, but again, there's something for everyone in these names.
Right, and you just have to identify where you live. And,
right.
And for us, I like to trade the intermediate trends, and the trend for this one since the last quarter has been to the upside. You know, guys have been rewarded for buying the 21-day. Guys have been rewarded for adding on breakouts, and you know now it's pausing up here. But I do think that it's just it's tough. It's a tough trade. You look at the chart here. You know, from last quarter, here was your calculated entry when it broke this downtrend. That was at 620. You know, actually no, the 620 was right here. Okay, and then once it broke above the prior resistance, it was another trade around 660. Then when it came in and tested the 21-day, there was another trade. And then here is your ad above this 714. I remember these like it was the back of my hand because we were in this granularly. And then it hit a little top. And now it's, you know, you had a nice little 3-day move off of Monday's low. And it's right here. So expectations are high. This is going to have to deliver. It's going to have to be very, very positive for it to get to what my target was, you know, for this year above 800. You know, I think at this point, who cares what targets are? It's been a win-win. So if you're in there and you're a macro investor, what I would do is I would do some kind of option strategy, which for, here you go.
Actually, we did, I think it was a couple months ago, we did a vertical call going into, I think it was the last Google print actually, when you were on Bloomberg and we wrote that, we actually bought that strategy and it worked out.
So what would you do, like with the stock right now, if you're a macro investor, you've been in it for a year, how would you protect yourself?
What I would do is I wouldn't necessarily do anything going into earnings, kind of like you. I'm just not going to play the volatility around that. That's not my style in trading.
I'm saying if you own the stock, you're an investor.
Right.
How do you hedge it? Do you do a collar?
I'd probably buy some puts for that protection, because you know what, volatility is relatively cheap on this now. There's a lot of metrics that you have to look at, but that's one way I would go into it. Let's take a look at another one that just reported earnings, IBM. One of my absolute favorite names if you're a long-term fundamental person. This has rewarded you significantly over and over and over again with that nice healthy dividend. It's a $200 billion market cap company, consistently growing key areas like analytics and software. And guess what, guys? They just launched 10 more products last night in those key spaces. So there's definitely something for the intermediate trader, but for the long-term people that have it in your portfolios and you got smacked around following earnings, it's fine. In fact, we bought more in the portfolio yesterday.
Right, and if you're a long term, that means you've had it for 5 years and you've had tremendous gains. So what's 3, 4, 5, 6% now?
Right.
But for guys that trade intermediate who don't take it into earnings like myself, you know, I actually was a little skeptical going into earnings. So I'm like, here we are near historic highs. You have a company that's also has European exposure. It has a lot of public sector exposure. You know, it's priced to, you know, for perfection. So whatever. It wound up going to the downside. So now here we are. You look at the chart. Okay, it broke the 50-day. Okay, and you have a big gap. That's what you have to know right now. That's what you know. Okay, who knows what's going to happen in the future? Nobody knows. Okay, this is what I would tell you, is that here is your day yesterday. The longer it stays within this range and doesn't fill this gap and show you that it's on sale now, right? It was at 210, now it's below 202. It's $10 cheaper. If people don't come in and start buying it and say, wow, I can get it $10 cheaper because I didn't take it into the numbers, that'll show you that this gap will control the stock. Then after a few more days, if it takes out the low here, it's going to continue in that direction. If it does hold the low and go sideways for a few days and then trades into the gap, I'm sure guys like me and others will trade it in there. And then the more of the gap it negates, the more it shows you that people thought it was on sale. And then the more it, you know, the higher probability it continues to the upside at some point, you know, in the future. Because you look at the monthly, you know, this has happened before, and look at the, you know, you've been rewarded sticking to the game plan here. But if that game plan changes, you will see it first is by it not filling that gap and maybe even breaking below this uptrend that's been intact ever since 2008. So I would say really watch the low, watch this one night. The more macro level is right around here, 184, which is still a long way down. That's really, if you're a macro player in it for a long time, that needs to hold.
Yeah, and that's another name too from an options perspective, because now that the earnings is out and the volatility has come crushing down, might be a great opportunity for a bullishly biased vertical spread because it'll be relatively cheap. Let's move along to eBay. This one getting beat up as well. Quarter was relatively in line. What else did they say here? Came in basically on all metrics. I just think that it's had such an explosive move that you did see some of that profit taking, and I think if it gets into that mid-40ish level, you're going to see some aggressive buying there. Yeah. The quarter wasn't that bad.
No, but it just wasn't enough to gap it up like the last 2 quarters, and I think we talked about that yesterday. Again, I wish someone put a gun to my head, because both calls, I'm like, gun to head, I'll be short IBM, gun to head, I'd be short eBay.
But you're sticking to your trading plan, so that's what's key.
And I didn't have a gun to my head, so I didn't have to do the trade. And, you know, at this point, that goes with the mentality of traders right now, is that, you know, I'm on pace for my best year, not to be my drum, but it just shows you how I'm being a little protective. I'm not just taking, you know, $5,000 to $10,000 shots with option plays just because I have an idea. So instead, I'd rather trade it after. I'm in more control, and I'll just put it together that way. So anyway, with eBay, I don't think it was a disaster. I think it was a solid report, but just it's going to need some time now. It wasn't enough to, you know, stimulate it to new highs. If you look at the chart, last 2 quarters, look at this one, gapped up, went sideways before, you know, gapping up again last quarter, and this time, you know, no gap up. So I would say short term, you know, you want to make sure if you're not committed to it, it holds above 46. If it doesn't hold above 46, you know, you'll see a little bit of a move down. You'll see a move down to perhaps 44.78, and like you said, you know, low 40s, it's cheap. And here is a gap that I would love to protect. So at this point, I think that, you know, there's not much exciting. You know, it's not going to just be in play. It's not going to be all over the place. You probably would need to avoid it for a little while, and then, you know, buy the dip for them. What people will say could be a good 4th quarter as people start looking towards the holidays.
All right, let's wrap it up with MCP. We haven't spoken about this one in a while, but there was some decent volume on it yesterday, up about 5.6%.
Yeah, at the end of the day, we were having some fun. We were rolling through some of these like treasure for trash trades, and what I mean by that is, you know, someone else's trash that didn't follow the rules, that stayed with the stock and said, I'm going to hold it, I love it, and goes from 60 to 10 or whatever. Sometimes they get a volume bar and you get a few more days. And yesterday, there were a few of them that just quickly ignited. So if you want to write them down, you know, I'm just going to think about them off the top of my head. One of them was MCP. You look at the chart here, you know, stock's been battered and bruised. You know, it's come all the way down. Here is day 1. So I'm not sure what it's doing right now, but, you know, if it trades above yesterday's high with volume above 1138, it might continue. That could be an active trade. GMCR, another very highly shorted name. Look at the chart here. You know, last time it woke up, it had 3-4 days. This time woke up a little bit. You know, so maybe it continues. Put that on your trading plan for an active trade above yesterday's high. Maybe it squeezes more. That's 24.44. And I'll even give you one more someone talked to me about yesterday, DEC. Haven't looked at this one in a long time. This one broke this small lower pivot. There was some volume, closed near the highs. Stock's been battered and bruised. Tom Brady doesn't look good in furry boots, so maybe now's the time that people say, oh, this holiday is going to be cold, so who knows. But anyway, this is your treasures for trash trade. Here's your day one. Perhaps it makes a move to the moving average, for a little cash flow.
Well, it's pretty interesting. Everyone has poor expectations for Q3, and the market's been digesting everything relatively well. We're only into the first big week, but I feel like it's digesting it relatively well. On that note, everyone have a great day, great week. Good luck trading. Catch Scott at the end of the day as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.